Hi, everyone. So let us now discuss accounting for partnerships. But let us start first with its basic considerations and formation. So let us first define what partnership is. According to the Civil Code of the Philippines, Article 1767, partnership is a contract wherein two or more persons bind themselves to contribute money, property, or industry to a common fund with the intention of dividing the profit among themselves. Okay, so um, in the definition of the Civil Code of the Philippines, I'd like to highlight these terms. So two or more persons, of course, if um, there must be two or more persons in order to form a partnership, no, and then they are to contribute either money, property, or industry. One can contribute money only, or another person can contribute property only, or another person can as well contribute industry only. Also, if one partner will decide to contribute all of these, no, the money, property, or industry, he can still do that. And then they are to contribute it, no, in order to form a partnership. And then their intention for forming the partnership is to divide the profit among themselves. And actually, um, it is not all the time that um, a business will earn profit, especially when it is still in their formation stage. So, most likely in the first 3 years of operation, some companies will incur losses first than profit. So even losses, no, the partners they are still to divide it among themselves. Okay, and then another definition by the Uniform Partnership Act, Section 6. Um, to them, partnership is an association of two or more persons. So just like the Civil Code of the Philippines, no, it is a minimum of two, no individual. There must be a minimum of two individual in order to form a partnership. So two or more persons to carry on as co-owners a business for profit. Okay. So and then in a partnership, each owner is actually called a partner. Okay, so that's the definition of partnership. Let's now go to the characteristics of a partnership. So the characteristics of a partnership actually differs from that of a sole proprietorship. Okay, and I hope you guys are already or able to know the differences, no, because I believe you already have studied it in your basic accounting. So let's focus our discussion on the important characteristics of a partnership, and these are as follows: mutual contribution, then division of profits or losses, and then co-ownership of contributed assets. We also have mutual agency, and then limited life, unlimited liability, then the income taxes, and we also have the partner's equity account. So let's define each characteristic. So mutual contribution. Okay, so there cannot be a partnership without contribution of money, property, or industry. So when we say industry, it is actually a work or services which may either be your personal manual efforts, no, or intellectual contribution to the partnership. Okay, and then you are to contribute um, these money, property, and industry to a common fund. So that is why it is called mutual contribution, because you are to contribute money, property, or industry to a common fund. Okay, and then next is the division of profits or losses. So the essence of partnership is that each partner must share in the profits or losses of the venture. no, or the business. So you are to agree among themselves, no, the proportion, no, or the sharings of the profits or losses, because one partner may contribute more money or even more property. Okay, so before the formation of the partnership, the partners must also decide how much, no, are they going to share in the profit or even the losses of the business. So there is a division of profits or losses. Okay, so next is the co-ownership of contributed assets, diba? We have learned that the partners will contribute money, property, or industry. So these are now assets of the partnership. Okay, so all assets, no, that were being contributed into the partnership are owned by the partnership. So it is no longer owned by each partner, but it is owned by the partnership or the venture itself, no? By virtue of its separate and distinct juridical personality. So a partnership, no, has a juridical personality. So with the partners, no, they have a separate personality pod. So whatever contributions they are giving into the partnership, so that is now um the the that is now the, what do you call this, it is now the ownership of the partnership, and not anymore the owner are the partners, no? So again, I'd like to repeat, all assets that were contributed to the partnership are now owned by the partnership and not by the partners, no, themselves. Okay, because a partnership has a separate juridical personality that is different from the other partners. Okay, so once those assets, no, the money, property, or even the industry that is being contributed to the partnership, and I'm industry of course is not included, only assets, so money and property. So all assets that were being contributed to the partnership is not anymore uh is the partnership is now the owner, not anymore the partners. Okay, so each partner is now the co-owner, no? So that's it, the co-ownership of contributed assets. The owner of the assets contributed is now the partnership. So the partners, they are now called co-owners of the contributed assets. Okay, so I hope that's clear. And then we go to mutual agency. Now, any partner can bind the other partners to a contract if he is acting within his express or implied authority. So, of course, if it's a business, so the partnership will enter other contracts. So even if one partner is not present, no, only one partner is um, making transaction to a particular client. So even only one partner is doing the transaction, still the other partners, no, they are still accountable, no. So that is why it is called mutual agency, because any partner can bind the other partners to a contract, any contract that the partnership will enter into. So for example, one partner will have a transaction from a particular supplier, so um the other partners is also accountable to that particular supplier. So that's mutual um, agency. Any partner can bind the other partners to a contract, no, if he is acting within his express or implied authority. Okay. And then limited life. So one characteristic of a partnership, no, is its limited life. So um it only has a limited life, no, it may be dissolved by the admission if there is another person who will like join the partnership, so the original partnership will be dissolved. Okay, and then uh like for example, there are two persons, no, who is entering into a partnership. So let us say for example person A and B, and then they form a partnership AB. Okay. And then here comes another person, so partner C, and he wanted to join the partnership AB. So they are not to continue the partnership AB. Instead, they are to dissolve the partnership and then form another partnership because there is admission of another partner. So that is why a partnership no has only a limited life, and not only by admission that the partnership may be dissolved, but even the death of a partner, no, so automatic the partnership will be dissolved, or even insolvency, no, incapacity of one partner. And then if also one partner decide to withdraw the partnership, then the partnership will be dissolved. Or even if the partnership term is already expired, so the partnership will be dissolved. So that is why a partnership has a limited life. No, it may be dissolved by the admission of another partner, the death of a partner, if one partner is now insolvent, no, unable anymore to contribute to the partnership, and then incapacity, and then if one partner withdraws no sa partnership, and then if the term of the partnership expires, so the partnership will be dissolved. And then another characteristic of a partnership, we have here unlimited liability. So all partners, no, all partners, um, except limited partners, and we will discuss it no in the next slides, the different kinds of partners. So unlimited liability, all partners, including an industrial partner, no, they are personally liable for all the debts incurred by the partnership. So if the partnership cannot settle its obligations, no, if they cannot pay anymore their debts, so the creditors, they have claims, no, their claims will be satisfied from the personal assets of the partners without any biases or prejudice to the rights of the separate creditors of the partners. So another, this is actually a disadvantage of a partnership because they will not only run after the assets of the partnership, no, the creditors, no, if not able to pay na ang partnership, so even the personal property of all partners, no, the creditor of the partnership, they have the right to go after the personal property of the partners. So that is why one characteristic of a partnership is unlimited liability. Next is income taxes. So partnerships, no, any kind of partnerships, however, except the general professional partnerships. When we say general professional partnerships, these are partnerships that is being formed by professionals. So let us say a group of accountants, then they wanted to form a partnership. So that kind of partnership is called a general professional partnership. So those who are practicing their profession and they want to decide that they want to form a partnership, so that partnership is um called a general professional partnership. So like po na siya nga klase nga partnership, no, just like and not like the usual na business partnership. Okay, because their contribution to that kind of partnership, no, is their practice of their profession or the exercise of their profession. Okay, so that is a um, general professional partnership. So the income tax of a partnership, again, except for general professional partnerships, they are subject to a tax rate of 30%. No, 30% of the taxable income of a partnership. Okay, and then last characteristic of a partnership is the partner's equity accounts. So the accounting for partnerships, no, are much like the accounting for sole proprietorships. Okay, the difference lies in the number of the partner's equity account. So each partner has a capital account at the same time a withdrawal account. No, that's and then it serves a similar functions no as the related accounts for sole proprietorship. Diba? When we say sole proprietorship, of course, there is only one owner. So it is expected that there is only one capital account and then one drawing account. So sa partnership naman, each partner has a capital account and then a withdrawal account. And then, but the function or these accounts is actually just related with the accounts of a sole proprietorship. So only the number of the partners equity accounts lang ang difference between the equity account of a sole proprietorship and that of a partnership. So that's the characteristics of a partnership. So let me repeat. We have here mutual contribution. So the partners are to contribute money, property, or industry, and then the division of profits or losses. Each partner must share in the profits or losses of the venture, and then co-ownership of the contributed assets. So all assets that are being contributed to the partnership is now owned by the partnership. However, the owners no is not anymore the individual owner of those assets contributed, but they are now co-owners no, of those assets. Then we also have mutual agency, that is any partner can bind the other partners to a contract. And then limited life, no, a partnership may be dissolved no, if there is admission, death, insolvency, incapacity, withdrawal of a partner, or expiration of the term. And then we have unlimited liability, no, wherein all partners are personally liable for all debts incurred. So if the partnership cannot anymore pay its creditors, the creditors know they can run after the personal assets of the partners. And then income taxes, except for general professional partnerships, it is subject to 30% tax no of their taxable income, 30% rate of the taxable income of the partnership. And then partners equity account. So each partner has a capital account and withdrawal account. So if there are three partners, so it is expected that there are three capital accounts and three withdrawal accounts. Okay, so that's the characteristics of a partnership. So let's now move to the advantages and then the disadvantages of a partnership. I already have mentioned one, that is the unlimited liability, but this time we will um, discuss the other advantages and disadvantages of a partnership. So a partnership offers certain advantages over a sole proprietorship and that of a corporation. Now, it also has a number of disadvantages. So first, let us discuss the advantages of a partnership versus of that of a sole proprietorship. So first advantage is that it brings greater financial capability to the business. Okay, so it is obvious because um, each partner can contribute no any assets to the business, so there is greater financial capability to the business. And then next is combines special skills, expertise, and experience of the partners. So next is that um, a partnership offers relative freedom and flexibility of action in decision making. So um, this advantage, no, wherein the partners can combine special skills, expertise, and experience of the partners. Of course, it is an advantage because these partners can contribute, no, if they have any special skills, expertise, or experience to the business rather than a proprietorship because there is only one owner. So more walay brainstorming and all. So that is why it is an advantage for a partnership, no, if the partners can contribute any skills, expertise, or experience to the partnership. And then it offers relative freedom and flexibility of action in the decision making, especially in the um, when there is when the partnership will enter any contracts, no, in the future. So the partners know they have um, freedom, but again, whatever decision that one partner, no, has made to the partnership, the other partner is also um, bound to that transaction. Okay, and then so those are the advantages of a partnership versus that of a proprietorship or a sole proprietorship. Next would be the advantages of a partnership versus of that of a corporations. So partnerships, no, they are um, easier and less expensive to organize. Unlike for corporation, there are a lot of requirements and there are a lot of government agencies na dapat na register sila. But for corporations, they are only obliged to be registered sa um I believe with the DTI and then with the City Hall and then with the BIR. But for corporations, aside sa kaning three, they are to be registered to the Securities of Exchange Commission. So um that is why this is an advantage for a partnership because it is easier and less expensive to organize. Okay, and then also um one advantage of a partnership versus of a corporation is that it is more personal and informal. Okay, so if the partners will just agree that they will form a partnership, then they can do that. However, um for a corporation, they are still to draft like the articles of incorporation, the bylaws pa. So it's um medyo hassle ang mag-form of corporation than that of a partnership. Okay. And then so let's now discuss on the disadvantages of a partnership. So we were able to discuss na the advantages of a partnership over versus sole proprietorship in versus the corporation. So now let's discuss its disadvantages. So again, it is easily dissolved and thus it is unstable, no, compared to a corporation. Okay, so corporation, if one member of or if one stockholder will decide not to continue anymore in the corporation, still the corporation will not cease but will still continue its operation. However, for a partnership, if one partner decides to withdraw, no, his membership, no, sa kanang partnership, so automatic that partnership will be dissolved. So that is why limited lang yun ang life for a partnership than that of a corporation. So it is a disadvantage. And then another disadvantage the mutual agency and unlimited liability that may create personal obligations to partners. Diba? Mutual agency, if one partner can bind the other partners in any transactions, no nga i-enter sa one partner lang, and then unlimited liability since again the creditors can go after even the personal assets of the partners. So unlimited liability and mutual agency, it may create personal obligations to the partners. And then third disadvantage of a partnership is that it is less effective than a corporation in raising large amounts of capital. Okay? Because for a corporation, the corporation can invite investors man to invest to the company. Okay? So there is a corporation has the ability to raise large amounts of capital than that of a partnership. Kaya if partnership lang, even if you do not have money or property, but you have the industry or the service to contribute to the partnership, then still a partnership can be formed. But for a corporation, you cannot be a stockholder of a corporation if you do not have any assets to contribute to the corporation. Okay, so that is why it is a disadvantage of a partnership, no, na it cannot raise that large amounts to the business, unlike of that sa corporation, no, because it can invite other investors, no, or other stockholders, and then also the each shareholders of the company can contribute unlimited amounts of money to the corporation. So that's it. No, so again, the disadvantages of a partnership, it can easily be dissolved, so it is unstable. And then the mutual agency and unlimited liability, it may create personal obligations to partners, and then partnership is less effective than a corporation in raising large amounts of capital. So let us distinguish partnership from corporation. First, in the manner of creation. So a partnership is created by mere agreement. So if two persons would want to form a partnership, they agrees to form a partnership, then they can form a partnership. Okay? While a corporation is created by operation of law. So it is very formal, no? Kung mag-form of corporation. So if five persons would want to, or if five persons agree to make a corporation, they cannot do it immediately. No, they cannot form immediately a corporation because corporations, no, they are operated under the law, so they are still to follow certain requirements on how to form a corporation, unlike of a partnership. Na even just mere agreement, then you can now form a partnership. And then the number of persons for a partnership, a minimum of two persons. Now they can now form a partnership, two or more persons. And then for a corporation, before a corporation will be formed, if there is at least five persons, not exceeding 15 persons. No, but now there is what we called one person corporation. So even if you decide to form a corporation, so you can form actually a corporation. So ang kaning at least five, not exceeding 15, this is the old requirement, but still it is existing. No, if 5 persons will decide to form a corporation, a corporation will be formed. But if there is only one person who would want to create a corporation, still he can do that. And then third, the commencement of juridical personality. So sa partnership, so there must be a execution of the articles of partnership. So in the articles of partnership, no, they are to state the agreements of the partners, especially the sharing of the profits or losses. And then for the corporation, and then if there is already the articles of partnership is already there, then they can already start the partnership. However, for the corporation no needs to wait first for the certificate of incorporation that will be issued by the Securities and Exchange Commission before it will begin or commence its personality. So a corporation cannot be called a corporation if there is not yet any evidence of a certificate of incorporation coming from the Securities and Exchange Commission. However, for a partnership, if there is already the articles of partnership, then the partnership can now start its personality. No, it can now start its operation. So the partnership can now be formed even by the execution of the articles of partnership. So that's the difference of a partnership and then of a corporation. So we also have here another when we are to distinguish partnership from corporation, the management. So for the partnership, so every partner is an agent of the partnership. So that is why even if only one partner will execute a contract with a vendor or supplier, the other partners is still bound to whatever agreement they will have. Okay, but for the corporation, the management with the board of directors. So it is vested on the board of directors. And then the extent of liability in a partnership, each of the partners, except for a limited partner, each partner is liable to the extent of his personal assets. Okay. And then in a corporation, the shareholders, they are liable only to the extent of their interest or investment in the corporation. So sa partnership, even the personal assets of the partners, the creditors can go after. However, sa corporation, if the corporation is now bankrupt, the vendors can only run, or I mean the creditors can only run after the contribution of that particular stockholder to the corporation. So if he just invested this sum of amount to the corporation, so up to that extent lang na maka-go after ang mga creditors. Okay, so that's the extent of liability. Then next is the right of succession. For a partnership, in a partnership, there is no right of succession. So in a corporation, there is a right of succession. So a corporation, a corporation has the capacity of continued existence, regardless of the death, withdrawal, insolvency, or incapacity of its directors and stockholders. But for a partnership, the The reason why there is no right of succession, because it can easily be dissolved. Even by just admission of a new partner, then the partnership will be dissolved. But for the corporation, there is right of succession because the corporation will not be affected even if one board of directors will decide not to continue anymore with the corporation. So still the corporation will continue to operate. Okay, so that's the right of succession. Then for the terms of existence, for a partnership, no, for any period of time that is stipulated by the partners. Okay, so if the partners would want to have a partnership for like 5 years, then they can do that, and that's the life of the partnership. Then um if there is no uh, admission of admission of other partners, withdrawal or death of um and or of other partners. So the 5-year contract that is stated in the articles of partnership, then that's the life of the partnership. However, for a corporation, in a corporation, it is not to exceed 50 years. But for example, if the 50 years has already lapsed, the corporation can still extend the life of the corporation. So it is subject to extension. Not only after 50 years, then it will stop now, but if the board of directors would want to decide that they will still continue the corporation, then they are to extend the life of the corporation. So that's the terms of existence. So partnership distinguished from corporation. So they differ in the manner of creation, the number of persons, the commencement of juridical personality, the management, extent of liability, right of succession, and then the terms of existence. So let's now have the classifications of partnership. Now, first, let us classify partnership according to object. So first is universal partnership of all present property. No, all present property. Universal partnership of all present property. So all contributions become part of the partnership fund. So any contributions that the partners would give to the partnership, no, so that's the partnership fund. Okay. And then the universal partnership of profits. So all that the partners may acquire by their industry or work during the existence of the partnership, and the use of whatever the partners contributed at the time of the institution of the contract will now belong to the partnership. Then if the articles of universal partnership did not specify its nature, it will considered a universal partnership of profits. So all that the partners may acquire by their industry or work during the existence of the partnership, and the use of whatever the partners contributed at the time of the institution of the contract belong to the partnership. And then if it is not specified, no, the nature of the if the articles of universal partnership did not specify its nature, so it will consider a universal partnership of profits. Okay, so that means if in the articles of partnership, no, it was not stated that the reason why they formed the partnership is not to contribute, is okay, let me rephrase it. So in the articles of partnership, no, so this is classification of partnership according to object class. So first there is universal partnership of all present property. So all contributed property to the partnership is now will now become part of the partnership fund. But if in the articles of partnership, if they did not state it, no, if it is not stated that it is a universal partnership of all present property, then automatically it is called a universal partnership of profits. Okay, so they formed the partnership, no, because they wanted to share the profits, know that they will have with the transactions of the partnership. Okay, and then last is the particular partnership. So the object of the object of the partnership is determinate, its use or fruit, specific undertaking, or the exercise of a profession or vocation. So it is a particular partnership if there is specific reason why the partnership is formed. So like for example, if it is the exercise of profession or vocation, so it is a general GPP, general professional partnership. So that's classification of a partnership according to object. So for a classification of partnership according to object, it can be a universal partnership or a particular partnership. Then if it is a universal partnership, it can be a universal partnership of all present property or a universal partnership of profits. Okay, next would be the classification of partnership according to liability. So first, general. No, so a partnership is a general partnership if all partners are liable to the extent of their separate properties. Okay. And then a limited partnership if the limited partners are liable only to the extent of their personal contributions. So if it is a general partnership, no, all partners are liable even up to the extent of their separate properties, separate personal properties. However, for a limited partnership, only to the extent of their contribution to the partnership. So if but in a limited partnership, our law states that there shall be at least one general partner. So pwede na if a partnership is a limited partnership, so all partners are limited partners. No, a limited partnership, no, there must be at least one general partner. Okay, so I'd like to repeat the classification of a partnership according to liability. Um, One is a general partnership wherein all partners are liable even up to the extent of their separate or their personal properties. Okay, and then for a limited partnership, no, the limited partners are only liable to the extent of their personal contribution to the partnership. But in our law, we cannot form a pure limited partners lang na mag-form of limited partnership. No, no. For a limited partnership to exist, there must be at least one general partner. Okay. Then next, classification according to the duration. So a partnership, no, with a fixed term or for a particular undertaking. So there is also a partnership at will, wherein one in which no term is specified and is not formed for any particular undertaking. So pwede partnership with a fixed term or partnership siya nga gi-form for a particular purpose. And then if that purpose has already been achieved or nahuman na ang ang or or nag-stop na ang partnership because the purpose has already been achieved. So that's a partnership with a um, fixed term or a partnership for a particular undertaking. So another is a partnership at will, no, wherein there is no term that is specified, and a partnership at will is not formed for any particular undertaking. So that's classification according to duration. Next would be classification according to purpose. So a partnership can be formed if if it is a commercial or trading partnership. So a commercial or trading partnership, no, it is formed for the transaction of business. Okay, then next is the professional or non-trading partnership. So it is formed for the exercise of profession. So if purely business, so it's a commercial or trading partnership. But if a partnership is formed because they are to contribute or exercise their profession, so it is a professional or non-trading partnership. And then the classification of partnership according to the legality of existence. So we have the jure partnership, one which has complied with all the legal requirements for its establishment. No, if all legal requirements are complied, no, for the partnership to be established, then it is a de jure partnership. Then a de facto partnership naman, if one which has failed to comply with all the legal requirements of its for its establishment. So if one requirement has not been complied, no, so it is a de facto partnership. So classification according to legality of existence, we have de jure partnership and de facto partnership. So we have here the kinds of partners. So we have 10: general partner, limited partner, capitalist partner, industrial partner, managing partner. We also have liquidating partner, dormant partner, silent partner, secret partner, and the nominal partner or partner by estoppel. So let me discuss one by one. So first, a general partner. So a general partner is one who is liable to the extent of his separate property after all the assets of the partnership are exhausted. No, so especially if the partnership is already bankrupt. So again, the creditors can run after the separate property of a general partner. Okay, no. And the next, a limited partner, one who is liable only to the extent of his capital contribution. So if you are a limited partner, so whatever is your personal contribution to the partnership, so that there apud ka liable. Okay? And then a limited partner, you are not allowed to contribute industry or services only. No? So if you're a limited partner, so you are to contribute either money or property, no, but you cannot contribute only um industry or service, no, for you to become a limited partner. So dili pwede nga imo i-contribute lang is your service. No, you are still to contribute either money or property for you to become a limited partner. Okay, but up to the extent of your capital contribution, there are pud ka liable. Okay, and then next is a capitalist partner. A capitalist partner is one who contributes his knowledge or personal service to, or a capitalist partner is one who contributes money or property to the common fund of the partnership. So if imong contribution is money or property, then you are a capitalist partner. However, if your contribution is only your knowledge or your personal service to the partnership, then you are called an industrial partner. Okay. And then if you are appointed as a manager of the partnership, then you are a managing partner. Okay. And then a liquidating partner naman, if you're if you are tasked to wind up or settle the affairs of the partnership. Okay. No, if you are a liquidating partner is one who is designated to wind up or settle the affairs of the partnership after dissolution. So if the partners no decide to um dissolve the corporation, so one must be assigned as a liquidating partner. So if you're a liquidating partner, so your task is to settle the affairs of the partnership. And then next is a dormant partner. A dormant partner is one who does not take no active part in the business. So if you are inactive, no, um, in the partnership, so you are a dormant partner, no. So if you are not active, no, in the partnership, you are a dormant partner, and also you are not known as a partner. Okay, that's a dormant partner. A silent partner naman is one who does not take active part in the business of the partnership, but you are known as a partner. So, mo lang ang difference between a dormant partner and a silent partner. A dormant partner and a silent partner, they're both inactive to the business. No, you do not take active part in the business. However, a dormant partner, he's not known as a partner, but for a silent partner, you are known as a partner. Okay, and then for a secret partner, you are active in the business, but you are not known as a partner by the outside parties. So that is why you are a secret partner. So you're active in the business, however, other parties would not recognize you as part of the partnership. The nominal partner or partner by estoppel, one who is actually not a partner, but you represent yourself as one of the partners. So dili gid actually ka partner, no one who is not actually a partner, but you represent know yourself as one of the partners. So that's a nominal partner or partner by estoppel. Okay. So I think we're done with the first part of the um, basic considerations and formation of a partnership. So if you wanted to review the discussion, so you can have the partnership and corporation accounting by Balyada. Okay, so that's our reference for our advanced accounting. So I think that would be all. Thank you so much, everyone. So I hope you have learned something from the discussion. And if there are any questions, um you can post it in our classroom if there is something that you wanted to be clarified on. Okay, so don't hesitate to ask. Thank you and stay safe. Bye.